Hello folks, this is Tony Drake with Drake Associates with a March 2016 Educational Economic Update. In this video, we'll talk about some of the economic headlines that influenced markets in the last month and give you some insight into what they could mean for you as an investor. Please stay tuned at the end for a required disclosure statement. After a rocky January for stocks, February didn't offer investors any respite. Volatility was still the name of the game. However, we did get some positive news. Let's talk about some of the month's major headlines. If you have been watching the news, you've probably heard a lot of talk about a possible recession ahead. Is a recession coming? Some economists are worried about a U.S. recession because of issues like low oil and commodity pricing, emerging market problems in countries like China, and fears that central banks are out of tools to fight economic trouble. These fears are, however, baseless. However, they don't necessarily spell recession. There are a lot of positives to consider. One indicator argues against a coming U.S. recession is the labor market. The January jobs report showed that the economy gained 151,000 jobs last month. The gains pushed the headline unemployment down to 4.9%, the lowest it's been since February of 2008. Another positive is that wages are growing and Americans are continuing to spend money, which is a great sign for the economy. In short, we don't really know if a recession is coming, and neither does anyone else, regardless of what they say on TV. Recessions don't just happen for no reason, but we are taking concerns very seriously and watching fundamentals carefully. Plummeting crude oil prices have had a lot to do with negative sentiment in recent months. Crude oil prices are so low because the world is awash and the supply glut continues to grow, combined with slowing demand from China, is really pushing those prices down. Investors worry that these low prices mean global economic situation is growing worse. Lower pricing also cuts into energy company profits as well, and those companies have pretty high stakes in the energy industry. With 87% of the S&P 500 companies reporting in, we see that overall earnings were down 3.6% in the fourth quarter of last year. However, if we remove the energy sector, it grew about 2.5%. Firms that mostly depend on U.S. did even better. Now, the overall economic picture wasn't as bad as expected last quarter. The second estimate of quarter four economic growth showed that GDP grew 1%, not the 0.7% originally estimated. While economic growth decelerated in the last 3 months of the year, it didn't slow down as much as economists thought. Responding to concerns about economic growth, the Federal Reserve declined to raise interest rates again in January meeting, keeping them low to help boost your investor confidence. Now, while the Open Market Committee will meet again in March, most economists don't think the Fed hike will raise rates again until June at the earliest. The bottom line, 2016 has been a rocky road for investors, and volatility is likely to last for a while. While corrections aren't always easy, let's remember that they're coming after years of solid equity growth. We're keeping a close eye on fundamentals and helping our clients make more informed decisions based on the latest research. If you have concerns about your personal financial situation, please give us a call at 414-409-7226. We're always happy to talk to you. That's it for the March Educational Economic Update. As always, if you have questions or concerns about what we've discussed, please give our office a call. We have some upcoming Social Security classes on March 15th and 17th at the Oconomowoc Public Library. We'd love to have you. Also, our Retirement Planning Today classes are on March 10th and 17th at Mount Mary, and our Retirement Ready workshop on March 2nd at our office here in Waukesha. Visit wealthwisconsin.com to learn more, and be sure to listen to the Retirement Ready radio show on AM 620 WTMJ Saturdays at 1 o'clock. Once again, this is Tony Drake with Drake Associates, signing off for the month of March 2016. Please remember, nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 414-409-7226. We'd be happy to talk to you. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. Investment advisory services are provided by Drake Associates, LLC, a state of Wisconsin registered investment advisor. Insurance products are offered through a separate company, Law Financial Advisory Group, LLC, a Wisconsin insurance agency. Clients are under no obligation to purchase any recommended insurance product.